Hello and welcome to the next video on the series. I just wanted to give a quick update on the accounts that I have now. Currently, we did pass 4 Alpha Zero accounts. I know I can only trade 3, so I'll have 1 in reserve, but you can see here the day I passed them, we had about $700-ish, 600 gain on all 4 accounts. If you look at the equity curve, clearly this was not one of those evaluations where I took it in 2 trades over leveraging. Um, it was about 6 days of trading. But the stats are the most important. We can see here that the average win was $82. The average loss was 37. I've been trying to get closer to the 3-to-1 range. That's where my best trades can be. Back testing, I see that I can hold it for 3-to-1, but what I've been doing is scaling out into the extreme buying or selling pressure. For example, if I'm short and we start getting massive movement to the downside, I want to be going ahead and scaling out of that position. And I tend to scale out a little aggressively, I've noticed. So I do want to work on that. But my win rate was just shy of 50%. I can definitely fix that. There were some, revenge trades that I cut quickly. As soon as I entered them, I decided I want to continue to build good habits. But this screenshot here was from one of the last accounts that I had before. They deactivated the evals and gave me the funded accounts. Currently, we're sitting at about the copy trading screwed up the first day, but I have about 500 in one account and 200 and 300 in the second and third account. So we're continuing to grow those. But yeah, this is how switching from ICT to trading volume, watching how the volume profile reacts, along with value areas and understanding trend days versus consolidation days, which is what we're going to get into today. Not consolidation, but balance days, especially with the exponential risk sizing is what I'm going to get into today. So if we want to go ahead and take a look at trend days versus the balance days, okay, a lot of people understand that there's going to be choppy days compared to nice moving days, but we're going to look at trend days, how they're one directional days, usually bulls or bears are in control, continuous higher highs and lower lows with two-stage delivery. Okay, clean days, you want to be sizing in heavier on those days, but how do you really capture those days and understand before it's happened if it's going to be a trend day or a balance day? A balance day really has no clear direction. I'm sure everybody has sat through one of these days, either got chopped up or looked at it after the day and said, you know what, it didn't move much. I'm happy I didn't watch the market. There's a lot of mean reversions, okay, so it'll go one way and then revert back to the mean wherever the volume is. With a lot of fake outs and the violent stop hunts. So that really comes in with the balance days, why you really want to be sizing lower and not really avoiding those days because there is money to be made in those days. There's going to be a lot of balance days compared to trend days, but there's going to be a lot of like big two candles that come to anybody's entries points or where their stops are, whether you believe it's an algorithm or just buying and selling pressure. That is stop hunts. Okay, you'll notice on one of the examples that I give from Friday, um, I had gotten out right at the perfect time, and I actually have a live recording of that trading on the balance day. So I'll throw that in there. When we look at trend days, again, like I said, higher highs and higher lows, not a lot of stop hunts. If you look at the volume profile here, you can understand that at this point here, and I didn't really draw it that well with the line chart, there's going to be consolidation. Okay, so when you talk about stages of delivery or stages of the market by Stan Weinstein, people see that accumulation and expect maybe a stage 3 or stage 4 to continue from that. Okay, on a trend day, based off of your analysis, you can confirm that we are accumulating to continue higher, okay, and we'll build value up here, okay, higher highs and higher lows. On the balance day, okay, the bell curve will, or the volume profile will look like a bell curve, okay, all the volume is here and will revert back to the mean, staying at value high and value area low. Okay, the best trades are going to be taken on the exhaustion at value area high, traded back to the mean, not really trading back to value area low, okay, because you do get something like this where we'll have the sharp push up, which we saw on Friday, okay? So what I want to talk about for these days is the importance of exponential risk sizing, okay? This has immensely benefited my trading, okay? I learned this from S&B Capital Lance Breinstein. Um, basically everybody goes in, when you hear talk about trading psychology, you want to filter out the bad trades. Okay, you never really know when it's going to be a bad trade. All you can do is put yourself in the best situation with the highest probability. So you're not always going to get an A plus trade every single time, and when you do, you're not always going to win that trade. Okay, so you are going to have to take some A, B, and possibly C trades. Okay, you have to stack those small wins to eventually take the A plus trade. So when you talk about trading, it is not going to be static or dynamic, or it's not going to be static trade sizing. Okay, so you're not going to risk $120 every single trade and have a 3-to-1 win percentage and be the best trader that you can be. Okay, what you're going to do is on the C trades, maybe on a balanced day, that's not on a balanced day, it's definitely not going to take you to an A plus trade, for me at least. Okay, I'm never going to size in with my highest sizing on a balanced day because there's a lot of chop. Okay, maybe an A trade, maybe the trade that I took on Friday could be considered an A. I would call it a B trade. So I sized in lighter, and we'll talk about that later. But you can take those, $80 risks, and it all depends on what size your account is. Okay, I'm basing this off of a prop firm account, like when you have $2,000 of max risk, and um, obviously if you had $2,000 in a personal account, you would never be risking 550. That A plus might be 120 at the very top, and then the C would look like a $30 to $40 stop, maybe. Okay, it depends on your parameters and your rules. Every trader is different. But when you look at the C trades, you take a couple losses on C's. If you have a 50 win percentage, those C's are actually going to work out most of the time as well. It's not just going to be, a 30%, 20% win percentage on the C trades, but you do want to filter out. I didn't even put D on here because we're not going to look at D trades. Filter out some of the C trades, understand that cash is a position and you can stay out of the market. When you look at the B trades, you're understanding that there is an equal probability of wins and losses. With the A trades, you're most likely gonna win the trade. Understanding your win percentage, and then the A trades, you really, really, really want to size in heavy. You're gonna get these A trades maybe once a month, twice a month tops. Um, and it all depends on the market conditions as well. Like right now, we're just in a consolidated range. The the thesis of we're not going to go higher, but assuming that the breakouts aren't as common, higher or lower, it's most likely going to be labeled an A trade. And you have to be honest with yourself, with what you know about technical analysis. For example, I had labeled out an ICT trade. We had pulled into a higher time frame PD array, we swept liquidity, broke market structure, created a fair value gap, and that was an AA plus, checked every single box for an ICT trade. And I was fading it with the strategy that I have because the liquidity sweeps and trading the reversals just is not ever going to be an A plus trade. Okay. So with that being said, you have to find a good strategy. You have to have good technical analysis and understand the market to be in the A plus trade. All right, so let's look at a trend day. With the trend day, just like the curve that I drew earlier, you can see that value is developing higher. If we had a point of control on here, you'd see the point of control raising and raising and raising. There is no point in fading these moves here, okay? Even though at this point here, it will seem like we're overextended, we're in a trend day. Bulls are in control. So if you don't want to get in all the way up here because you think it's too expensive, then stay out, cash as a position, or size in lighter, okay? You want to be sizing in heavy at this point here. This will be an AA plus trade for whatever you see. You want to be sizing in more aggressively on these days compared to these days, right? Just a lot of chop. When I talk about mean reversions, right, we're not going to go from value area high straight to value area low. We're going to have some chop, eventually make our way down to value area low. But if you can get one good trade out of this, get a quick scalp, get a quick, you know, because that $80 stop loss that you have and you trade it for a 2-to-1 or a 3-to-1 is a full stop loss on a B or A trade, okay, that you can use. So you do want to add those C trades in. You don't just want to sit on the sidelines every day because a lot of the days are going to be balanced, so you're going to miss a lot of opportunities. Okay, now this is just a quick example of a balanced day. You can see we have the value area. I have mine set at about 68%, and we're just going to make our way. You want to be fading the extremes here. You don't really want to be inside of the chop here. You fade the extremes, and you understand that anything could happen a lot on these balanced days. There is no accumulation, reversal, accumulation, continuation on balanced days like this. Okay, so with that being said, I'm going to switch over to how you can truly identify most of the time on if it's going to be a trend day or a balanced day. Okay, so right now I'm on Thinkorswim. All right, What I'm focusing on is market internals right here. Usually I have the VOLT as well as the VIX up here. Um, we are going to go to the VIX for a second just to talk about the importance of the VIX, okay, which is the um, fear index. So if we go to 1 year, we're actually going to hop over to 5 years, 1 day, okay? And we're going to slide this over. Now and I have my ranges marked out, okay? So usually when we come to this level here, this red line, we end up rolling over, okay? Extremes like this are there's a lot of fear. So we're usually going to have if there's a lot of fear in the market, what does that mean? You know, people aren't overly excited to buy stocks. There's not a lot of money pumping into it. We might roll over. It's not going to be an aggressive short. It's just saying be cautious that we might have some form of correction, okay? Now this area right here is medium. This is a little bit extreme, and this is, you know, parabolic capitulation up here, okay? So what you can notice is in the past 2 days right here, you can see that we came up to the extreme level, okay? Be cautious of the shorts here, but we eventually rolled back over to the 20 level, okay? Which the 20 level is just balanced, okay? People are fine. There's, you know, they're not risk adverse, but you know, they're also coming in and buying stocks. They're taking risks and stuff like that. Now that we're getting up into this area here, we need to be cautious. This green does not mean bulls. This green means warning, warning, be cautious, especially at this 30-ish level up here, okay? So that's why on Friday we weren't looking for, you know, a reversal continuation up, and we felt comfortable fading the extreme, okay? Now when we were here the day before, we'll get into, we're up above the 20 level, we might want to continue rolling down, kind of indicating for shorts, okay? So with that being said, the first thing we're going to do before we're going to develop if it's going to be a trend day or a balanced day is we're going to see at what areas are our technical analysis pointing at, okay? So you can see here when we opened up on Thursday, we had, you know, the point of control here that we had reached up to the day prior. We took a long on this day, reaching up to the virgin point of control up here, and we found fair value here, okay? One more thing I'm going to put on. Now, this is a volume profile for each day, 30-minute candles, but this is 1 day of trading. So the bell curve here, right, you can see it was just a balanced day, but bulls were in control. You don't want to be shorting that. What I'm going to put on right now is the volume profile, and it probably won't show because we've already been in that range, but you can clearly see here, and I'll go ahead and maximize this sell. All the biggest zone of volume occurred right here, and you can see it extended out all the way over here, okay? It was there present on Thursday. Now what's going to happen when you're trading the volume profile? These high volume nodes is pretty much where a lot of fair value is. People agree on prices there because it means that there's a lot of volume transacted there, okay? A lot of volume is going to transact there when it's fair. Sellers agree, buyers agree. That's why we continue to stay in this area. What happens when the market opens up and we do not push above this? Because we rejected this, buying is not in the question for this day. Now the question is, are we going to continue, you know, if we open up and push lower here, if it's a balanced day, you can imagine we'd revert, okay? So shorts would get killed in this position. How can we identify if this is going to be trending and a push lower, and you can even see the volume being accepted down here? How can we understand it? Okay, at this point here, we're okay with getting short because we understand the day is a trending bear day. Well, you can use another market internal, which is the ad. So when you take a look at the ad here, you can see we aggressively opened up and popped down all the way to negative 1500 here. Very aggressive selling. If you take a look, we did end up pulling back up, right? So we understand that there are going to be retracements in a trending market. Once this broke here, all the bears stepped in and continued pushing this much, much lower, okay? At this point here, there is no buying going on in any of the stocks in the S&P 500. So we can capitalize on this. We can capitalize on the fact that we broke below the volume here and that the ad is now continuing to decrease here. We can look for short opportunities, understanding that today is going to be a trending day. Okay, so let's pop over to TradingView and take a look at what happened on Thursday. Okay, this is an example of a trending day. So I'm going to go ahead and get rid of all of this so we can actually see the volume for that day. Okay, All right, so this is Wednesday. Thursday has not opened up yet, and we're going to look at a big volume profile here if this will load. We can clearly see the high volume node here. So we have that marked on our chart. We want to see if buyers can break above that point. So when the market opens up on Thursday, the ad hasn't shown anything yet. Go to regular trading hours, and what do we do? We need to get to 9:30, right? Is 9:30? 3:50, right? Where's 9:30? Right here. We gap down aggressively, okay? We do not trade the gap and go. We do not expect price to gap down and continue lower, okay? We're never going to enter at this area right here, okay? Never are we going to do that. If we do end up gapping and going, we are going to understand that volume is going to develop at a certain point here, okay? Maybe lower down here, and we can enter the continuation short there. But for right here, this is just blind gambling if you were to enter on the gap and go right there. So what we have here is we're going to anchor our VWAP to 9:30 to give us an idea of where the buyers and sellers are for the given day, as long as the session volume profile for the morning session. Okay, so we're going to have this here on extend right, and we're going to watch how price develops. What we are looking for is some sort of value to be created where we end up accumulating at a certain point, and whether we hold that and continue higher or fail is up to the market, and we're just simply watching to see what happens. So at this level here, you can note that we are getting the volume to develop right in this area here. That does not mean that we are going to go higher here, okay? We are above the VWAP, so we want to be cautious that buyers are in control, but we have this huge area up here where we had massive selling, okay? Let's see what happens when we get to that area here, okay? I did skip a little farther, okay? We broke below VWAP, broke above VWAP. This is why you have to have all of these tools in your arsenal, because if you're simply blindly trading the VWAP every time we break or below, you're going to get mauled here, okay? We need to allow the trade to happen, and at this point here, we've seen that sellers have we are back up to this area here, okay? What would happen right now if we were to break above this area right here, okay? We would be looking for value to be developed here or here, and we would simply trade on the side of the bulls because they have now broken a key area right here, okay? We have not gotten that yet, okay? What we did realize is that we tried to create volume here and failed. We have this low volume node at this point here, so if this is a bull day, we would dip into here and continue higher. What are we going to watch? We are going to watch if this area right here can get disrespected, okay? And no buyers wanted to step up where there was no volume there, okay? So simply what we're waiting for now is a form of retracement to this low volume area right here. And when you start seeing these things happen, right, what we can also identify is this move above VWAP here was a fake move. And my best trade that I took to actually pass my accounts was this break above the 9 EMA, targeting 3 to 1. Scaling out. Remember, like I said, we didn't actually get the full trade for the 3 to 1 because we scaled out on the aggressive push lower. This right here on the entry of this down close candle here is the best trade that you can take. Understanding that it is a little higher risk, but we tried to develop volume. Number one, we failed. We tried to dip into the low volume area here. We failed. Coming off of a super important high volume node right here that was holding, okay? A lot of sellers had limit orders right here pushing the market down, okay? So once that occurs, we do end up selling off here, okay? Now, if you miss this trade right here, okay, which is possible, the next best opportunity is on this retracement to the low volume node right here, okay? This is considered a protected high. We are not going to go sweep that. At this point here, we have no protected highs right here. That's not a protected high, and that's not a protected high. Once we pop back into that low volume node, what we are looking for is a break above the 9 EMA, below the 9 EMA. I don't ever take a trade unless we break below the 9 EMA, okay? And we look for 3 to 1 for this trade. Do we get it? Boom, okay? So this is how we're understanding that we're in a short market, just like I showed on the ad, right? The ad has broken here, and this was at 10:03. What time did this occur? About 10:03. We broke on the ad. Clearly bearish. Now the biggest indicator is the tick chart. When we opened up on the tick chart, this is showing every up and down tick on all the stocks in the S&P 500. We ticked aggressively to negative 1,000. That is super bearish, okay? And we continue closing below the zero line. Look at barely any candles closing above zero. Look at that. All the candles are closing below zero. Super bearish. We rejected the high volume node. Now the only thing is the trade idea. We've now broken below VWAP here. This was the best trade here. This was clearly that fake out, shakeout to trap any longs, and we continue going lower for the rest of the day. All right, when you get to this area here, you have not missed all the trades. What we are now looking for is for the shorts to start covering their positions, and we're going to look for another stage of accumulation, okay? What we want to see is at some point during this day, we want to make our way back up here a little bit, get all the short-handed shorts out, maybe entice some longs, but what we're looking for is some sort of lower high somewhere here, and this will be a larger accumulation range in this area to then trend lower, okay? So as we watch price develop, okay, we're watching the volume profile here. We understand that there's a lot of volume at this point, right? And it matches up with this. So we are going to watch and see how price reacts holding VWAP. Okay, this could have been another short here on the tap of VWAP. Understanding that it's not going to be a short-lived trade. And right here is where we get our lower high. So you have to be versatile. The lower high might not come all the way up here. We probably don't want to see that because that'll show more buyers are in control. We get a lower high at this point and we dip into our low volume node here. If we're in a trend day, people want to get orders in these low volume nodes. Once we dip into here, we have another shakeout above VWAP. And I traded all of this for my accounts. So this is not hindsight. I actually did take these trades. We get our fake out at this point here. What are we waiting for? We are simply waiting for a close below the 9 EMA, and we get that. And look how easy it is to just be on side with the market. We understand it's a trending day. We're not trying to fight the trend here, trying to buy up here, or trying to buy in here. We're not trying to fight anything. And we simply get that, and we're looking for a 3 to 1, okay? Now, what would my target be for this? My target for the day was, because we broke that low volume node here, do we have any other, and it's not going to load because I need the candles over here. When I get out of market replay, I'll show you what I was looking for. This is our short trade, okay? And we simply take the trade down, lower to 3 to 1 right here. Trade hits. I think we end up going a little bit lower. That's just staying on side with the trend. If you can sell the pullbacks on a trend day, now, for example, I'll take you back to the ad. If we did not continue this bearish down push on the ad and we started stalling out right here, right, and price started making its way up at this point, I would not be looking for a continuation trade at this point. But we are so bearish on all of the stocks, sellers are just going to keep pushing this market down and down and down. Now what I'm going to do is I'm going to hop out of market replay. We go to the 1 hour time frame and we're going to look for that other high volume node that I thought maybe could have been a target for the day, which was right at this area here. Okay, so remember this area here, and it might have been even here on this day. It was very close. Yes, it was this area. All right, so this high volume node right here, if we move from here, we're going to go to here, okay? If we break below here, we're going to make it to the next high volume area, okay? What we notice is on Thursday, remember this is our short trade right here that we took, we never made it to this area here. So on Friday, this leads into the Friday trade on why we're expecting, you know, a balanced day, right? So I'm going to actually mark out this right here. We have this high volume node right here. And on Friday, what happens is we gap below that high volume node right there and shoot directly into the next high volume area. Now, what I did was I took a short in this area here, thinking sellers would step up and send us lower down where there was no volume in here. Okay, I used light sizing because this is a high area where buyers could step up and defend this level for a short period of time. So we used light sizing because our target was so low. Okay, once buyers stepped in here, I understood that this might be a balanced day because there wasn't a lot of strength on the ad, on the tick. There wasn't a clear direction. What we're going to have is a Friday where it's just balanced price action. It's choppy. If sellers had stepped in at this area here, this would have been a massive trend day lower, and we didn't get that. So what can we do? We can fade the extremes, okay? If you notice here, and if I go to replay right here, you notice we do not have much volume up. I need the 1 hour chart. Right here. Very, very little volume, okay? Remember this area right here above this high volume node. If we're going to revert back to the mean, it's going to be up here, but we're still looking for our specific criteria. When we get to this level here, we tap it, our break below, right? The 9 EMA is here, and what we're targeting is not value area low. We're targeting the anchored VWAP, which is the average price. So we target right here, and we put it a little higher because remember the VWAP will develop, and we end up tapping right into it and reversing back. We got out on live. I'll show the video, but we're expecting, why this was a good trade is we're expecting a balanced day. We're not expecting volume to develop up here and continue higher. We're also not expecting value to develop down here and send us lower for a trend day. This is not a fake out to go lower. This is just a balanced day. So you have to be understanding and mindful of what kind of day you're in, right? We took a little bit of we took a stab on a short here, hoping that sellers would step up at VWAP and break us below this level here, and we didn't get it. Now, the best thing that I did, and you can see it on the live, is I didn't up my sizing here, which I usually do to make back for my loss. It would have worked out today if I had sized in maybe double, made back my loss plus some, but I understood that on a balanced day, the probabilities are not in my favor. So I'm going to use lighter size, and if I can get that good trade and just be break even on the day, that is beneficial for me in the long run, and I'll save up my capital for a nice trending day, okay? So that's how we're looking at the market. We're looking at the volume with the high value nodes and the low volume nodes. We're also looking at anchored VWAP, okay? The same way I'm not trading the gap and go on Thursdays, the same way I'm not trading the gap and go on Friday. Even though I did want to see sellers step up here, they never did, okay? We're in an area where just because buyers step in doesn't mean that they're pushing price higher. They're just here for support. They're just holding the market up right here until eventually we get to this level. And I would like to see on Monday or Tuesday or sometime later if buyers want to continue stepping up on this level. If they don't and we end up breaking through and we can see the tick chart look like this as well as this, that might be another trending day. So you need to be remembering that, and I will exponentially size up in my risk, okay? And that day will make up for all my losses, and that's how traders continue to make higher and higher equity curves. So with that being said, that was just a quick rundown on how I'm viewing the market. I will put the live trade. I was trying to organize my thoughts and go through everything I just did in the live trade. So if it's a little repetitive, sorry about that. But I'm going to try and record my live trades so that I can put them into videos like this. And I'll have more teaching moments in the future. So yeah, I hope you enjoyed the analysis, and I'll see you in another video. Okay, let's break down this short, why we are trading a mean reversion down into the 730 level. It all stems from the fact that we are looking at market internals that are bearish, okay? We are down at the negative 2000 level for the ad. If you take a look at, if this will pop over. Okay, if you take a look at the ad, we opened up and dropped down to 1700, negative 1700, continued pushing lower, had a little bit of a pullback. We were looking for price to continue lower at this point to seek deeper prices and fall off the volume cliff, because if you take a look, and I'll stop switching around so much, but our idea was we had at this point reached yesterday a high volume node. If it'll load. Alright, you can see our high volume node here that we had gapped down below. We were looking for continuation to see sellers pick up below this area and sell us down to this point here, okay? We can understand that volume is here. This is fair value for buyers and sellers, okay? Once we didn't get those buyers or sellers to step in at this point here, we had taken a loss on our alpha accounts because we sized and looking for sellers to step up. We didn't get that, understanding that we might want to go revisit this range here. Now this white line comes in because if you notice, yes, we had a high volume node here, but right above that we had very little volume, okay? So we're going to step in there, dip into the volume bank that I call that, where we can get some orders and then revert us back to fair range, okay? Where is fair range? Well, you notice we have the value area here along with all of this volume down here, okay? So this is very, very, very expensive for where we are at right now in the range, okay? Now this might not be a low resistance liquidity run where we end up trading all the way down here super violently, but I can position myself up here with lighter size, okay? I'm not going in, you know, with the exponential risk sizing. I want to take us back down to where volume is. This is going to be a balanced day. The bell curve is going to look, you know, short up here, make its way out. If I draw it, never really done any drawing on NinjaTrader, so I'll take you over to this chart here. If we were to look at the bell curve for the day, this is going to look very balanced, all right? And we'll dip down into a discounted price and maybe make our way back up here and then fizzle out here during the day and might have a run to set us up for Monday. But we're looking to revert us back to where all the volume is. So you can already see with light sizing, I'm back to break even on the day, okay? And we were also looking at this here, these breakout traders right here, not understanding there's lots of sellers up in this zone that I just highlighted with this white line here where there's no volume, okay? They're looking to trade acceptance of this range, okay? We broke below the 9 EMA. That was our confirmation. Our stop goes at the high, and we're now trading to the high volume, okay? And so what I'm going to do is I'm going to allow this to run. Once this account gets to break even, okay, we'll go ahead and scale some out. So this is 407. Let's go ahead and close 407. And that's just going to end our day, right? We're going to go ahead and close everything. Close there. And close there. We didn't get our people to step up, so that's just a break-even day. We took a loss here, and our win came back, and we're going to go ahead and get out of the trade here. I don't want to see this run up because it's not a low resistance day where we're going to have a trending day. We're going to revert back to here, and I don't want to see us climb up here, stop some people out, chop around. On a mean reversion day, take your small win. If you took a loss on the day, go ahead, take that profit and break even on the day and survive for a trending day where you can capitalize on the gains, okay? So I want to look back one more time at what